effectively, we are printing pieces of paper and getting real stuff in return for it. And there's the Triffin's Dilemma, which is a very well-known concept, which is if you're the world reserve currency, you're going to hollow out your manufacturing base in your middle class because you're delegating and outsourcing manufacturing an iPhone, manufacturing the food you consume, manufacturing the oil and the energy that you consume. And all you're doing is importing the real stuff and exporting this currency. And so it was intended to be a short-term solution that ended up compounding over a century. And so then what do we have today? We have the US, which naturally, because of the design of the system, has $36 trillion of debt and operates in what Trump calls a deficit, meaning we just push out pieces of paper and we operate trade unprofitably to import the stuff. I think it's a very exciting time for Bitcoin on the other side of 100K and seeing the US structurally short this volatility, have to provide liquidity to give participants leverage to lend it money and eventually debase the debt.
Jack Mallers opens with a surprising insight from the early days of the Trump presidency. Instead of injecting liquidity into the system as markets had anticipated, the administration turned out to be liquidity negative. That unexpected move rattled expectations and triggered a spike in market volatility. Mallers breaks it down further. The U.S. financial system is now structurally short volatility. In plain terms, we're so dependent on leverage that even a small uptick in volatility can shake the entire system. It's a fragile balance, and one sudden move can have ripple effects across global markets. If you're finding this analysis eye-opening, hit that like button. It helps more than you think. Subscribe and turn on notifications so you never miss deep dives like this into macro trends, crypto, and digital assets. Got thoughts on market liquidity or volatility? Drop them in the comments. We read and reply. Your support fuels the channel and helps us keep bringing you the insights that matter. Thanks for watching, and let's get into it.
I mean, I think the world was caught offside a little bit in that post-Trump's inauguration, he was actually liquidity negative, not liquidity positive. And so I think the market was caught a little offside. But I think that that's changing. What I would say on the macro is that the United States is structurally short volatility. What I mean by that is, going back to my macro story, the United States has no marginal lenders anymore. Who is willing to lend someone, if your buddy, Natalie, was $36 trillion in debt, would you lend them any more money? Probably not. So, if you look, China, India, Russia now isn't even allowed to lend the US money anymore, buy these instruments like the 10-year. So who is buying them? Our own banking system and hedge funds. If you look, you referenced Tether. Tether was the 6th largest buyer of this US debt. The Cayman Islands was number 1. And you'd think to yourself, how the Cayman Islands, how's that possible? It's because where all these hedge funds are domiciled. The reason I bring this up is the banks and the hedge funds require an immense amount of leverage to replace the buying power of a country like China. Leverage doesn't do well with volatility. So the reason that the US authorities step in whenever markets get volatile and provide liquidity and rule changes is because in order to support the amount of leverage needed for someone like Jamie Dimon and hedge funds to be the marginal lender to the US, they need stable markets with an immense amount of leverage. So I think what we saw is Trump was initially liquidity negative. He was trying to find where the lines were. How far can I push before I cascade the deck of cards? And he found the lines. And we saw the most volatile bond market activity since COVID. So this Liberation Week was up there with some of the biggest financial market volatility, the financial crisis, COVID. And so they found it. And now they're providing the liquidity. Now you're seeing M2 go up. Now you're seeing Treasury Scott Bessent come out and say, hey, we will propose Treasury buybacks. You're having Jamie Dimon say, please change the supplemental leverage ratio rule. Give us more leverage. So I think we're on the other side of liquidity negative. And my personal Bitcoin thesis is Bitcoin equals technology plus fiat liquidity. More fiat currency units that are issued and the more technology progresses, the more Bitcoin is going to be able to serve the world and, in my opinion, do well. And so I think it's a very exciting time for Bitcoin on the other side of 100K and seeing the US structurally short this volatility, have to provide liquidity to give participants leverage to lend it money and eventually debase the debt. Bitcoin is neutral distributed software. It's there to buy it if you want to buy it. It is a money that can be used for settlement amongst enemies. It has no bias, and that's the point. And so for those that understand money and its role as a market good that you don't consume, that's accessible, sellable, and liquid for you to store and exchange time and energy, it has to be available for anyone to buy in any quantities. And I think one of the most underrated parts of Satoshi's innovation is the design of the system is that you can own as much as you want. It doesn't give you any more influence over the rules of the system. And so it's not threatening for institutions to get involved. They can buy it just like you can, as much as they want, with any appetite. And I think it's a little bit anti-Bitcoin to say, we don't value those people's time and energy and their life story and their history and their participation in the global financial market. Bitcoin is just for us, this corner. I think it's stupid. We are printing pieces of paper and getting real stuff in return for it. And there's the Triffin's Dilemma, which is a very well-known concept, which is if you're the world reserve currency, you're going to hollow out your manufacturing base in your middle class because you're delegating and outsourcing manufacturing an iPhone, manufacturing the food you consume, manufacturing the oil and the energy that you consume. And all you're doing is importing the real stuff and exporting this currency. And so it was intended to be a short-term solution that ended up compounding over a century. And so then what do we have today? We have the US, which naturally, because of the design of the system, has $36 trillion of debt and operates in what Trump calls a deficit, meaning we just push out pieces of paper and we operate trade unprofitably to import the stuff. And someone like China, who's become the best manufacturer given the design of the system, they're operating in a surplus, which is $1 trillion plus. What actually happens here, Natalie, is when China or other countries operate in such a big surplus, in order for them to keep their exports competitive, meaning manufacture stuff and push it out to the rest of the world, they can't invest locally in the country. It would strengthen their currency and make their exports not as competitive because labor would be more expensive. So they take their trade surplus and they invest it in the Mag 7, in the NASDAQ, in US real estate. So the design of this financial system that we've built post the world wars and the US has perpetuated is as such, where all of our financial assets are highly inflated because they are catching the bid and the buying power of the trade surplus from our trading partners. We have no more middle class. We have no more manufacturing class. Our poor get exponentially more poor because trading partners like China are bidding up all the assets that people desire, like stocks, like land, like real estate.
The appreciating assets, and we're getting the depreciating goods. Yeah.
And the wealth class is getting exponentially wealthier without having to do any proof of work and provide value to society. So what we're seeing, and the way I would interpret what Trump is attempting to do, whether you like him or not, is unwind from that and say, we need to be able to produce stuff again in this country. We need to bring back a middle class. We need to take the US from running in a deficit and potentially a surplus. And now you're seeing capital structures reorder. So China's going to have to unwind capital then. And that's what a lot of the fight is about. And so for me, this is very bullish. Personally, I believe neutral reserve assets and monies that don't bias a particular government and can act as the broker for everyone's contributions, trade, and time and energy. So that's how I interpret what's going on. We're unwinding from a century of monetary alignment that is naturally unsustainable and wasn't even meant to last as long as it did. And it's getting to a tipping point. And so it's inherently going to be a little volatile. But I think it's what's best personally. And I'm very excited to see how Bitcoin performs.
We may still live in a world where the dollar dominates day-to-day transactions, but according to Jack Mallers, the real shift is happening quietly behind the scenes. Wealth is increasingly being stored in Bitcoin. Mallers even outlines a bold future scenario, a post-debt devaluation world, where the US backs its dollar with Bitcoin. In that case, the dollar could still hold onto its global reserve currency status, but in an entirely new form anchored to a digital asset rather than trust alone. Let's watch more clips from the interview.
Politicians' jobs are to get reelected. And so you have to only say and do things that are politically palatable. That's like just rule number one. So I don't think Trump would ever say he does not want the US to be the world reserve currency. I also think we need to zero in on definitions here personally.
Right.
Do I think that the US dollar won't be what my piece of pizza is priced in 5 years? No, of course, I'm not claiming that. But do I think, to your point, the reserve asset where people actually store the capital in the world? I mean, there's a little over $900 trillion worth of stuff us humans own today. That's money, sovereign debt, equities, real estate, precious metals, collectibles, art, Bitcoin, et cetera, et cetera. About half of that, Natalie, we've monetized. We use as a savings account.
Yep.
So I would say the dollar will increasingly not be used for that. I don't think sovereign debt will either. I think we'll continue to see a rotation into money that carries the properties that the market demands, which is fixed supply, some scarcity element, divisibility, transportability, and ability to sovereignly hold it on your own. I think Bitcoin is going to be the best competitor to go after that market. Can the dollar remain the world reserve currency? Sure. Right? Like, listen, if the United States buys enough gold and Bitcoin, can Trump one day come out and say, we've devalued the debt enough, we own enough Bitcoin, all your dollars are backed by Bitcoin, consider problem solved? Yeah, of course. If they come out, devalue the debt enough and build a Bitcoin position that's $50 trillion over the next 10 years, problem solved. All your dollars are backed by Bitcoin. So that keeps the dollars the world reserve currency because your hot dog on the corner is priced in dollars. But the reality is the capital, the value that humans are creating, saving, and then later exchanging is actually persisted in an instrument that isn't the dollar. There's just, that's the world I think we're very rapidly heading towards. I wouldn't say, I don't want that to be the headline that I think that they're executing their plan. What I would say is if you're a country that's structurally intended to operate in a deficit, which the US is, we kind of walked through that. We have to operate in a deficit for now. I know that Trump's talking about removing the deficit, but if you look at Treasury Secretary Bessent's goals, he's just looking at shrinking it, but maintaining one. So we have to operate. Yeah, we have to. Now, that means if you think of us like a business, we're an unprofitable country. In order, how does someone meet payroll if they can't sustain themselves? Well, they got to get a loan. They got to get capital from someone else. So the question is, who's giving us the loan to continue to finance ourselves as a country? It used to be our trading partners. It used to be China, Russia, India, Japan. It's not anymore. It is our own banking system and levered hedge funds in the Cayman Islands. And so what you see when Scott Bessent comes out and says, hey guys, everyone calm down. I'm going to do Treasury buybacks. That is, I'm going to provide the leverage and the market principles necessary for these hedge funds to remain ungodly levered to replace the buying power of China. When Jamie Dimon comes out and hit the Bloomberg terminal with, we need to reverse the SLR, that stands for supplemental leverage ratio. That's so that US banking system can be ungodly levered. That's, to me, it's they have to solve the problem of who's going to be the marginal lender to the United States. And if it requires this much leverage, they can't afford volatility. So as soon as markets start to move, they print the money. What did Jerome Powell come out and say? QT is ending. QE could be beginning. He's positioning himself to, if he needs to do yield curve control, if he needs to support the market that lends to the US government, he can. So that's, I don't know if they're executing the plan, but that's just the reality is they're structurally short volatility because the amount of leverage is in this financial system. And we've ran out of lenders to the United States.
Today, it's not foreign governments keeping the U.S. system afloat, it's our own banks and hedge funds, operating with extreme leverage, and when volatility spikes, that leverage turns into a liability, lenders get shaky, markets wobble, and the government, it has to rush in with liquidity. That's why we're seeing urgent calls for action, Scott Bessent pushing for Treasury buybacks, Jamie Dimon begging for SLR supplementary leverage ratio changes, Jerome Powell ending QT, and hinting at a return to QE. As Moore puts it, the system is now so dependent on leverage, it simply can't handle volatility. Every market hiccup threatens the whole structure. The only real option left, print more money. And that's exactly why Bitcoin wins, because it exists outside this fragile system. If this breakdown helped you see the bigger picture, hit that like button. It helps push this content to more viewers. Subscribe and turn on notifications so you never miss the next macro update, crypto insight, or digital asset analysis. Watch more videos from our channel to explore how Bitcoin, blockchain, and financial innovation are reshaping the global economy. What's your view on where we're headed? QE, collapse, or crypto revolution? Drop your thoughts in the comments. Thanks for watching. Your support fuels the mission. Let's keep learning, questioning, and stacking. See you on next video.